Okay, today I'm going to share with you pledging and unpledging. So the goal is actually to how to unlock more home loan even with a smaller income, right? This will be based on 2026 ruling with a 4% MES stress test and based on 55% TDSR. All right. So as usual, just before we start, just so that we are clear, all right, these are based on the stress test and it's based on this time of filming. So any coincidence is just purely coincidence. And then please do consult your mortgage broker or even consult to me so that I'll be able to give you more advice. Without further ado, let's continue. Okay, for example, right now you found out your dream condo of, let's say, for example, 2 million, but the bank only loan you about 921K, which is less than 50%. So we know that, for property, if you want to maximize your property returns, always go for the max loan, which is 75%. So what do you do now? So in short, we need to find out what is TDSR. TDSR is actually total debt servicing ratio. All right, it's actually 55% of all your debt. So that meaning you say that every $1,000 you earn, only 55% can be used for the loan repayment. So, and this is actually based on 4% MES stress test. That means right now, even the interest is like 1.5%, but they'll base it on 4%. All right. So let's say use one example for this person here. All right, is age 35, 8,000 income. All right, this 2 million, same the 2 million target. So qualified loan by right is only 921K. And in order for 75% of 2 million, which is 1.5 million, there's a loan shortfall of 578K. So, and then the normal down payment of 25% is 500K. So total cash, if he goes via the natural way, right, he will need about 1/million cash. So right now, he have a shortfall of 578K that, he want to prove for it. So what can you do? So we actually introduced this one we call pledging unpledging. All right, it's actually extra paper income for your TDSR actually. So TDSR is actually pledging is actually meant to lock your funds for 4 years, right? So it requires a smaller amount. But for unpledged, right, the good thing is that you only need to show funds, what we call show funds for 2 to 3 weeks. But you typically need about 3.5% of the pledge amount. So for buyers with a lot of liquidity, this is very good because the funds are released once the loan is dispersed. So you need not lock in for 4 years and you can have more flexibility with your funds. All right. So using the same example to close the gap of 578K shortfall of loan. So there's three different paths. All right, we can have this full pledge, which is 240K. So that meaning you say they put 240K with the bank, lock in for 4 years, they will loan you the full 1.5 million loan. Or if you don't want to lock in for 4 years, you can do the full unpledged, which is 803K, and then you just need to hold it, have this amount put inside the bank for about 2 to 3 weeks. Or you can do a mixture, 50/50, 120K pledge, and then 400 over 1,000 unpledged. All right, so total you need 522, but unpledged amount will be returned to you about 2 to 3 weeks later. Okay, so let's say have a case study using the same buyer, age 35, 8K income. He have about 600K spare cash after the 25% down payment. So, and then he need to bridge this 578K shortfall in loan. So let's see how he have the ability to do, and then what can be done in you are in his scenario. All right, it's option with extra 600K. If you do full pledge, right? Uh, then he will have 359K. He'll be locked in for 240K will be locked, and then so he had left 359. So this 359K will be free. But full pledge, he will need 800 over 1,000. So there's still a shortfall of 203. So full unpledged may not be a very good option for him, unless he want to borrow money from friends, relative, and even parents. Right? This is how normally they do it. All right, but if he don't want, he's just shortfall of this. So we actually can do for the third one, which is what we call half pledging and half pledge and half unpledged. Right? Meaning to say that you lock in 50%, which is 120K of this amount. All right. Then you pledge in 479K. All right. So total up 600K, you still have left this amount. And this amount of pledging, right, will go back to here. So meaning to say that out of 600K, he only used 120K of pledging instead of 359K. So it spares up some amount for him. Right? So which will you go for? Whether is it full pledge, unpledged, or 50-50 mix? Actually, there's no one size answer that fits all. All right. It's just whether is it suitable for you at this point of time. All right. So why consider this and who shouldn't? All right. So benefits, right, is that okay, there's no new income needed. All right, it's fully pledged, unpledged, or even a custom flexible. Turn your ideal cash into real purchasing power, and fund remains you. Nothing is spent, only parking. All right. Just to take note that you need to, for pledging, right, there's a 4 years lock-in. And then you need to lock in for 4 years lah. So basically, and then for unpledged, right, you need a huge amount. So some people opt for a hybrid, which is half-half. So it all depends on how much cash you have on hand first. All right, this is not for you know who is not eligible for or who will not be suitable for. It's like for those who need cash in that 4 years for the pledging. That means you need everything of the, you can't even pledge. You can't pledge full 50%, full 100%, no pledging at all. Then you only can go for unpledging. And if you don't even have that amount, then of course can't be helped. All right. So for buyers, right, who close to income instability, right, this is also an issue because if you don't have income and yeah. So those who are already stretched thin on the 25% down payment, right, then shouldn't even consider this. So this is not for buyers who have already have issue with this 25% down payment. So if you already, just nice for got 25% down payment and you don't have extra funds for pledging and unpledging, then this might not be suitable for you. All right. And for older buyers, you're already hit the 65 years mark. So most likely financing option is very limited, even with pledging and unpledging. So for age 65 and above, right, maybe you can consider buying in full. All right, so do you want to know your numbers? So every buyer's TDSR, pledging, unpledging, the figures are really different. So your income, existing debt, and spare cash all change the calculation significantly. So this is just a simple example. So my name is Brandon here. This is my number here. So if you do wish to find out more about your numbers, your affordability, and then after that, what options are there, and then what kind of properties are suitable for you with whatever existing options you have, do feel free to come and let me know. All right, that's all. Take care. Have a nice day. Ciao.